Imagine a world where a few giants pull the strings behind the scenes. You've heard of ABC, marveled at Apple's technological wonders, and seen Koch Industries' name on vast enterprises. But there's one name hidden in the shadows, operating on a level that seems almost fictional. Hello and welcome back to Lux Underground. In this video, we will look into the world of the Vanguard Group, unveiling the story of how a Pennsylvania-based mutual fund company rose to be one of the world's largest asset managers. The Vanguard Group overview. Let's start at the beginning. Founded in 1975 by John C. Bogle, the Vanguard Group was established as a way to offer investors low-cost mutual funds, a revolutionary approach at the time. This essence has driven them from their humble origins to becoming a titan in the investment world, overseeing trillions in assets. Vanguard's unique business model has it set apart in the investment industry since its establishment. The company introduced a groundbreaking concept. It would be owned by its funds. This means that instead of having external shareholders who expect profits, Vanguard's funds are owned by their investors. This model removes potential conflicts of interest seen in other firms, prioritizing fund shareholders over profit margins. Such an investor-centric approach had clear implications on costs. Vanguard's expense ratios, which represent the costs of managing and operating a mutual fund, have consistently been lower than the industry average. For context, as of 2020, Vanguard's average expense ratio hovered around 0.1%, in contrast to the industry's average of 0.57%. Over time, this difference in fees can translate to significant savings for investors. The benefits of this strategy were reflected in Vanguard's growth. By the late 1980s, only a little over a decade since its founding, Vanguard managed assets worth $50 billion. This trajectory only ascended, and by the 2000s, the company surpassed $1 trillion in assets. By 2021, that figure reached an impressive $7 trillion in global assets under management. But Vanguard's influence didn't stop at its own growth. Its relentless focus on low fees ignited a competitive response across the industry, often termed the Vanguard Effect. Competitors trying to emulate Vanguard's success began reducing their fees. This shift not only benefited Vanguard investors, but also led to cost reductions across the investment sector, saving billions for investors globally. Vanguard's investor-owned structure and unwavering commitment to low fees transformed the investment landscape, making it more equitable and favorable for the everyday investor. The company's commitment to its shareholders and its investment philosophy paid off. By the 2010s, Vanguard was overseeing several $1 trillion, rivaling other giants in the financial industry. Their index funds, in particular, became the investment of choice for countless individuals and institutions, further bolstering their impressive growth. Controversies and criticisms. Success on the global stage, especially in the financial realm, invariably draws attention, both positive and negative. The Vanguard Group, known for its footprint in asset management, has faced criticisms, notably for its strong commitment to passive investing. Since its foundation in 1975, Vanguard's preference for index funds became a defining feature of their approach. By the close of 2020, such funds comprised a substantial portion of Vanguard's assets under management, underscoring the firm's faith in this strategy. Some critics have voiced concerns that a robust emphasis on passive investments might restrain financial innovation by reducing active trading in the markets, potentially leading to market price distortions. Moreover, Vanguard's extensive holdings in corporate shares, as seen in 2019 when they were among the top 3 shareholders for nearly all S&P 500 companies, raised questions about corporate governance and potential undue influence. However, Vanguard's achievements and intentions offer another perspective. Their dedication to passive investing mirrors their commitment to providing investors with low-cost opportunities, always aiming to minimize fees, a benefit directly transferred to their investors. Simultaneously, they've displayed adaptability by progressively incorporating ESG, environmental social governance criteria into their investment selections, aligning with the increasing global emphasis on sustainable investment. Moreover, Vanguard also manages a significant volume in active funds, indicating their willingness to diversify strategies based on varied investor needs. Over time, Vanguard's record, combined with their adaptive approach, reveals a multifaceted strategy that balances market demands, investment philosophies, and evolving global economic narratives. Tools and reach of the Vanguard Group. The Vanguard Group's influence in the world of investment is nothing short of impressive. Bogle's vision of a low-cost passive approach to investing was groundbreaking at the time. Prior to this, the investment landscape was predominantly dominated by active management strategies and associated high fees. But by the end of 2020, Vanguard managed over $6.2 trillion in global assets, a figure that speaks volumes about the massive shift they instigated in the industry. While they might not have proprietary tools akin to Aladdin, what they do possess is a deep-rooted commitment to investor-centric strategies. Over 30 million investors worldwide have put their trust in Vanguard, swayed by their consistent emphasis on reducing costs and maximizing returns. The firm's expense ratios have consistently been 82% lower than the industry average, a fact that has endeared them to both novice and seasoned investors alike. Beyond just numbers, Vanguard's clout in the global business arena is formidable. As of 2019, they were significant shareholders in almost 90% of the S&P 500 companies. This vast stake in the corporate world isn't just a testament to their investment acumen, but also grants them considerable influence when it comes to corporate decisions and policies. Their sheer presence and the volume of shares they hold mean that when Vanguard speaks, boardrooms across the world listen. Their long-standing emphasis on sustainability and long-term growth often finds its way into corporate strategies and directives, ensuring that companies don't just chase short-term gains, but look at the bigger, long-term picture. Their commitment to transparency and corporate governance has often driven discussions in the wider financial community. For instance, in recent years, they've been advocating for companies to provide clearer disclosures about environmental risks and strategies, reinforcing the narrative that businesses today need to be more environmentally accountable. Thus, while Vanguard may not make headlines with flashy tools or software, their consistent philosophy, vast assets under management, and active role in corporate governance solidify their position as one of the most influential entities in the global financial ecosystem. John C. Bogle, the man behind Vanguard. At the core of this financial titan lies a man whose personal journey embodies resilience and foresight. John C. Bogle. Born in 1929 during the onset of the Great Depression, his early experiences shaped a keen sense of understanding about the volatility and unpredictability of markets. Initially met with skepticism and labeled Bogle's folly, this fund mirrored the performance of the S&P 500, championing the then radical concept of passive investing. Bogle's philosophy was rooted in minimizing cost to enhance returns for investors. His seminal book, Common Sense on Mutual Funds, released in 1999, further elucidated his stance, highlighting how many actively managed funds fell short when fees were considered. Beyond just pioneering index funds, Bogle was a tireless advocate for investor rights and transparency in finance. His principles propelled Vanguard's assets to surpass $5.3 trillion by 2019. Even post-Vanguard, Bogle's voice remained influential, emphasizing long-term, steady investing. The magnitude of Vanguard's ascent and the global embrace of index investing bear witness to Bogle's transformative impact on finance. Vanguard's involvement in popular industries. Vanguard's financial footprint extends across the spectrum of industries, solidifying its reputation as a giant in the investment realm. In Silicon Valley, the epicenter of tech innovation, Vanguard's influence is hard to miss. Consider Apple, the tech titan known for its iPhones and innovative ecosystems. By 2020, Vanguard's status wasn't just that of a mere institutional investor. It had emerged as one of Apple's top institutional shareholders, commanding a significant slice of the tech giant's outstanding shares, which underscores the depth of its engagement in the tech world. Yet Vanguard's tech footprints don't end with Apple. In the realm of search engines, software, and digital advertising, they have cast a wide net, securing substantial stakes in Alphabet, the parent company of Google. This investment places Vanguard in the very heart of the digital age, influencing search algorithms, digital ad revenue, and even the future of AI. But to define Vanguard as just a tech investor would be a grave oversight. Their investment extends to the healthcare sector, a dynamic and ever-evolving industry. Here, Vanguard's discerning eye has zeroed in on both established pharmaceutical giants and pioneering biotech startups. They have vested interest in companies at the forefront of medical research, driving advancements in drug discovery, genetic therapies, and next-gen medical technologies. This strategy showcases Vanguard's knack for balancing stability with innovation in their portfolio. Further broadening their horizon, Vanguard has made its presence felt in the entertainment industry, investing in media corporations that dictate popular culture trends. Their stakes in infrastructure and renewable energy companies highlight their forward-looking approach, gearing towards a sustainable future. Vanguard's investments are thus a mirror to the global economic landscape, highlighting their keen understanding of market dynamics and a strategic vision that spans industries. This extensive involvement raises vital questions about the concentration of power and its implications. With Vanguard's pivot towards ESG investments, there's a clear indication of their commitment to responsible stewardship. Yet as climate concerns and social challenges escalate, the world watches closely. Their investment choices in many ways will shape the direction in which industries move, emphasizing the critical role of global asset managers in sculpting a sustainable future. As the 21st century's challenges, be it the ecological urgency of climate change or the socio-economic divides aggravated by income disparities, come to the fore, the world watches closely. How will titans like Vanguard navigate these tumultuous waters? And what role will they play in shaping a more equitable, sustainable global economy? Thank you for joining us on this fascinating journey into the Vanguard Group. Stay tuned for more insightful content on Lux Underground.